Hello traders, Corey Mitchell here. In this video I want to talk about what to do after a price structure breaks. In prior videos I looked at trading price structures, which means we are just trading inside of whatever price structure is going on. So I have an example of a range here. But then the logical question becomes, what do we do once the price moves out? So that's going to be the concept of this video, and it will help tie together some of the other pieces of the strategy and make it more so that we aren't just trading ranges, triangles, expanding ranges, those types of things, but we can also capitalize on the trends. So I have an example up here of the New Zealand dollar yen. This is a 1 hour chart, and we can see the price has been in this structure for a long time, just moving sideways up until this point, moving sideways for a few weeks and just selling off once we got near the top. As you can see, I don't care exactly where the lines are or where I draw my trend lines. I often use regression channels, and how those are used is you just go from wherever you feel the channel starts. So I didn't feel it started down here. This was the first kind of high. Once we saw this high matching that other high, and then we saw a low down here, we could start drawing a regression channel. And then as the price action unfolds, we just add a new one. So this regression channel is connected from here, and then you just sweep it over. It doesn't matter where you click on the chart. You can even click down here. It's only based on time, not price, where you click it. So you can just where you want to start it and where you want to end it, and that's the price channel that it's in. So mine, I think I ended it back there. Yeah, so we can see a little bit different depending on how far you draw it out. And then I've also just thrown in my own trend lines here. And again, I'm not matching exact highs and lows. These are just an estimate, because once the price gets into this area, that's when I'm going to watch. I'm going to drop down to a lower time frame to watch for a reversal signal near the trend line area. It can be a little bit below, a little bit above. Doesn't matter to me. So these trend lines don't have to be exact. Don't worry about that too much. Just as long as they show the general area that the price has been moving in. So there's a long trade potential here. This occurred right after news. So this was a hard one to catch. You would have had to had your order out in advance. This one a little easier. This one started to go, and then we had a breakout. So here's where the breakout comes in. So during the trade, while this range is going on, I'm not really concerned about a breakout. I'm just going to assume that the price is going to continue in the price structure. So once we get to the top here, I'm looking for opportunities to get short. Now that doesn't mean the price can't break out higher. So a couple things may happen. I may get the signal to go short, in which case I'm short, and I either have a winning trade, or maybe it drops a little bit like this one and then breaks out higher. In that case I have a losing trade, or the price just rallies up to the trend line and keeps going. In that case there's no trade and we just have a breakout. Once the breakout occurs, and I want a breakout is confirmed by a sizable move outside of the range. If it just pops out a tiny bit like it did here, I'm still looking at the short. But once we have a pretty decent move and it stays out there for quite a while, that's a breakout. Now at this point, we can start looking at our next trading opportunity. And this is where the trend comes in. So at this point right here, we can see we're getting back toward the low of this channel. And I've thrown a few little possible trade candidates out here. As the price has broken out, it started to move into another mini price structure. So I drew that in just to show that we're in a range. And then we also have this channel higher. And if you don't feel that they match your highs and lows exactly, you can always tighten them up a little bit so that it moves them a little bit closer to those lows. This low here. And so this gives you an idea of where you may want to start looking for some long entries. So long entries would be in this area. We may have had one today or yesterday as the price pulled back here and popped up. But we may still get another opportunity on that one if this range continues. Maybe we'll get a pullback down into here, a false breakout, which would scare out of all the longs. And then if we start to curl back up, probably a potential good trade for this to run back to the upside. I've noted two possible targets if we were to get a trade here. One would be the top of the range, because this is a valid small price structure right now. And it's still, if we get a trade down here with a pretty small stop loss, that would still give us a 4-to-1 reward to risk. And in the, if you go to Forex Trading Tips, there is a checklist for this strategy. And in that article, it discusses when you're in an ascending channel, you can also put a target slightly above the prior highs. So you can look at kind of how far the price ran last time, be conservative. Last time the price ran about 90 pips above the high. I think this one I put at about half of that. Yeah, 50 pips or so. So you can put a target a little bit above the high. You could even be really conservative and put it up there. That still bumps your risk up to, or reward to risk up to 6-to-1. So if we did get this trade, or if you took this one in here, based on the channel or this price structure, these would be viable targets. Now you can draw this in at any time, even as the price is moving up before the breakout. You can draw these channels in just to help give you a bit of a insight into where the price is. And then as price action keeps unfolding, you can kind of see where maybe the next pullback is, and then this one keeps going. So that gives you an idea that maybe we are heading on our way back up. And you want to update these as new price action comes in. So here, this one, very sharp down, but then you get a slower pullback. And again, wouldn't be of much use down here except to tell you that the price is running higher. But let's say that we get a breakout at the bottom, then you have that already set up to tell you where your next potential trade is. So if that dropped down, then you know you have a possible trade coming back up into the top of this channel area. Again, it doesn't have to be exact. We're not looking for the price to exactly stop here and we just enter short right there. All this tells us is that we're looking for a potential signal to get short. So if we start to see price action that indicates selling up in this area, that the buying has really stalled out, that would tell us to maybe get short if this had broken down. Let's look at another example. The Euro USD was in a similar type of range. It had a breakout, draw the channel in. Channel tells us now, maybe wait for the pullback into this area before looking to go long. Why do I do this? Because it can, look at how choppy this is in here. You could be going long, short, long, short, long, short. Okay, it's finally going. I don't want to get trapped into flipping long and short near an important area, especially multiple times. Like, you could have been, it's hard enough trying to pick one direction to go in this area, or like, you know, you're going short, but sometimes you might have to get in once, twice, sometimes even 3 times before the price moves your direction. So here you might have gone short, but then you got stopped out there and you had to get short again. And so I feel that's enough to handle, as opposed to having to think, okay, I'm short, oh, now I'm going to go long, oh, I got to go back short again. That's a lot to handle. So I'd prefer just to, when the price is in a price structure, just trade the price structure as if it's going to continue. If a breakout's going to happen, it's going to happen eventually anyway, and then you can just trade the next pullback after the breakout instead of having to go over in your head what you think is going to happen. Breakout, not breakout, false breakout. Oh, it's going, it's not going. That seems like just a little bit too much. And that would definitely work maybe with like a day trading strategy if you're like sitting there every minute of the day just watching these levels. You could maybe jump in, jump out, jump in, jump out. When you're watching an hourly chart, you're swing trading, it's a little bit harder to do that. So I prefer just to trade as if it's going to continue, wait for the patterns, the consolidations that break down other price action signals like these highs that just barely make progress. So that's like a warning sign, especially once you have a sharp move down like that. Can even get short down here for a potential drop as this channel continues. In this case, it only dropped a little bit and then we went up and broke out. That happens sometimes. But we're going to get another opportunity to get in on the new direction, so don't feel like you're missing out on the breakout. Most breakouts are a lot of them end up being false, and a lot of them don't have a lot of thrust behind them anyway because they've already made quite a trek to even get to that breakout point. So they may have some oomph left, but usually the bigger risk rewards, at least around the breakout point, are that the range continues, because in that case you have this entire area to capture, whereas on the breakout it's a little more ambiguous. We don't know how far that price could run, whereas at least here we have some idea of where the price has been running in the past. And of course there are targets for the breakout. You can just take like the size of the old range and add it to the breakout point to give you a possible target for a breakout. But again, once we can draw a new price structure, that's probably going to be a lot more accurate than those very basic projections, because here we'll be able to see how the price is moving within this trend. We know that if it pulls back here, we can put a target just below this high. That's a pretty conservative target, but it's still going to give us likely a huge reward to risk. Again, similar pattern here. These won't always be exact patterns you recognize, but just notice when the price is moving within range. This one, it had a descending tops, then it had a flat bottom, and then we also noted that it came into a triangle pattern here, so it had descending tops as well as ascending lows. Broke out of that, but it still traded within this big price structure, had the bounce up. Then here you would have been looking for a long, but you can see the price never even slowed down. It just tanked right through. So in this case we wouldn't be in a long near the bottom because the price gave us no indication that it was slowing down or starting to reverse. So we would just let that breakout happen and we look for the next opportunity, and probably coming up to it fairly shortly here as the price moves sideways. Maybe if we get one more pop above here. Remember, I don't need to trade right near this line. It could be a little bit below, a little bit above. It's more just the price action. So here we can see we've been at a bit of a range. So if we pop above this, have a bit of a false breakout, and then start selling off, this overall, that would tell me that we've exhausted what we have to the upside in this little area, and that this overall trend that we're moving in over the last several days is more likely to kick in, and we could sell off again. Price target go down here or slightly below the prior swing low. So that's how you can tie in trend trading along with the price structures. They're really the same thing. The trend is just another price structure. You don't have to use regression channels if you don't want, but they do provide a way, especially early in the trend, to provide some area of where to watch for a trade. Another thing you can kind of do is watch for, I do not use Fibonacci retracements in the typical way, so this is going to look quite different. I've just marked it 20, 30, 40, 50, 60, 70, 80, 90%. And all this is saying, so this was the last swing down. We retraced a little bit more than 60% of it. On this swing down, 60% would take you up into this area here. But that's just an estimate. It's not necessarily that we will retrace 60%, but once you're into a full-on trend, you can kind of look at how the price has acted in the past. In this case, since we already have a structure forming here, I would focus on this and look for opportunities to get short in and around the top of this little structure. And especially if it can align with the channel, that'd be great. So a couple more, even the next swing will probably take us right up into this area here, which the channel would agree with. We also have the top of this little range, so I think that would provide a nice opportunity. If the price starts moving up and it just keeps going, that's not a shorting opportunity. We just let it run for a bit. Then if we start to top out even a little bit above the regression channel, that would still be a short trade, and possibly it'd be near the 60% retracement level we were talking about. So if it starts to run up, maybe here, maybe it'll be similar to this one. We had a bit of a range here, a strong pop up, and then the sell-off, that could happen here. So I'd consider the short here first, but then if we get the pop, maybe it'll end up in this area where you start to see the price roll over again. That'd still be the short trade because we're moving in this downward channel right now. So yeah, that's how you combine them in a few different ways to look for entry points. I hope that helps you out tying the price structure strategy together. Until next time, happy trading.